Good morning, Bitcoiners. Hello, and welcome back to your economic calendar, the news and analysis you need to start the week off right in Bitcoin. Today is Monday, August 23rd, and we have a pretty big week already with Bitcoin over 50K and a lot of important things to share with you today. In this episode, we're going to start by showing you how to check your proof of reserves at Ledn. We recently announced our July 31st proof of reserves attestation, and every Ledn client can now check that their balances were included in the report. We're going to go through a step-by-step guide on how you can do that. Second, we're going to talk about options expiration week. We're heading into Bitcoin options expiration week with over 40,000 Bitcoins worth of contracts set to expire on Friday. We're going to look at the max pain point and a few other insights there. And last but certainly not least, we're going to talk about the SEC, who is holding an event on financial fraud, and it has crypto scheduled on the agenda to be discussed. So more details on that. As always, grab your coffees. It's going to be a great one. So the first thing we wanted to do today was share a few words about our proof of reserves standards and our most recent proof of reserves attestation. And as well, if you're a Ledn client, we're going to show you in a few quick steps how you can check your proof of reserves balances in our most recent attestation dated July 31st. So first off, at Ledn, we believe that transparency is critical to how we operate. This is why we invest in solutions like proof of reserves, to provide peace of mind that Ledn is able to meet all its financial obligations to our clients. During this process, we work with a trusted third-party accounting firm, Armanino LLP, to assure our clients that all of their assets are accounted for. If you are a Ledn client and you had a balance on July 31st as at 11:59 p.m. Eastern Standard Time, your balance was automatically and anonymously included in a recent proof of reserves attestation. So now what you see in your screen is our dashboard, a sample dashboard, and we're going to show you with a few clicks how you can check your proof of reserves balances if you are a Ledn client and had a balance as at July 31st. So the first thing you're going to want to do is go to the bottom of your dashboard, and at the bottom row, you're going to see the link for the most recent proof of reserve attestation dated July 31st. So what you're going to do now is you're going to copy your anonymous reference number and you're going to click on the link to the Armanino Trust Explorer. Once the link to the Armanino Trust Explorer opens, you can click on Check My Balance. Then you will input your hashed client ID, so your anonymous ID that was in your dashboard. You click Find Your Balances and you'll see your balances for each one of your products. So for this one, we're going to double check here our savings account balance. And we're going to go back to our dashboard and we're going to open our savings account and we're going to do a find for that value. And we see that it matches exactly the available balance in my savings account. So that is how you can check your proof of reserves balances and check it on all products as of July 31st, 11:59. So that is something that we're very, very proud of. Your balance will match to the Satoshi or to the cent. And please do check it. And thank you for helping us build a more transparent industry. Moving over to our price analysis of Bitcoin, we see that last week Bitcoin closed its fifth consecutive week of gains, finishing up last week up 4.83% at $49,301. It was an eventful week with several data points and events worth highlighting as they can have impacts on Bitcoin's prices in the coming months. First, let's cover Robinhood's Q2 earnings report, which was published on Thursday and gave us some really interesting data. So the graph that you had on your screen right now is essentially the split of transaction revenue for Robinhood, and it highlights cryptos, equities, options, and others. And as you can see, incredibly, cryptocurrency trading has grown to be the single biggest contributor to Robinhood's transaction revenue, eclipsing equity trading revenue as well as options trading revenue. At the current pace, cryptocurrency may represent more than equities and options revenue combined for Q3 2021. Now, why is this meaningful? Well, you can bet that other exchanges are certainly looking at this data and discussing their crypto strategy in real time. So very meaningful data out of Robinhood earnings report. Now, in other exchange-related news, this is the headline that many of you probably saw last week. Coinbase announced that it will be buying $500 million worth of crypto for its balance sheet, with plans to invest up to 10% or 10% of future profits into its crypto portfolio. Now, interesting notes here on this announcement. One of them was that Alessia Haas, Coinbase's financial chief, wrote in a blog that the company plans to invest in Ethereum proof of stake assets, DeFi tokens, and many other crypto assets supported for trading on our platform, so Coinbase's platform. This makes Coinbase the first publicly traded company to announce plans to purchase and hold proof of stake and DeFi tokens for their balance sheet. So very interesting announcement there. To put the plans or Coinbase's future plans of buying some of their profits into crypto in perspective, the company booked net earnings of $1.16 billion in the second quarter of 2021, meaning that if it maintains that profitability level for Q3 going forward, that means that it's going to be purchasing around $116 million worth of crypto for its balance sheet on a quarterly basis. So very interesting news coming out of Coinbase. And last, but certainly not least, another headline that was made the rounds last week was the fact that former SEC Chair Jay Clayton announced that he would be joining the advisory board for Fireblocks, a digital assets infrastructure provider. The moves by ex-regulators like Clayton and Brian Brooks are positive in that they signal a couple of things. For one, ex-regulators would not be joining these companies if they thought their futures were doomed by the proposed framework. The other one is that they feel that they might have a good opportunity to continue advancing their careers, meaning that they could see a lot of future growth in our industry. This week, we also get to hear from the SEC, the Fed, new home sales, GDP, inflation, and an update on employment in the US. All of these details we're going to cover in our What's Ahead section today, and we're also going to be diving into what we are seeing in the Bitcoin futures and options market. Moving over to our S&P 500 analysis and general US equity markets, as expected, geopolitical tensions brought strength to the US dollar, and that's the chart you have on your screen right now. As you can see here, the dollar last week rose by 1.01%. This created headwinds for US equities, with all major indices finishing the week lower. So if we go now to the S&P 500, we see that it finished the week down by 53 base points. If we look at the NASDAQ, we saw that it finished the week down 29 base points. Even though it's a green candle, it actually closed lower than the other one. So it is a down week, down 29 base points. And lastly, the Dow Jones finished down 1.11%. So again, all major indices finished in the red. Once again, and this is a trend that we've been seeing and we highlighted last week, the biggest loser for the week was the Russell 2000 index, down 2.5%. And this continues to highlight how the economic environment continues to hit small businesses the hardest. In addition to the geopolitical tensions, the market had to digest the Fed's meeting minutes that came out on Wednesday, which we also highlighted here. In those minutes, the Federal Reserve basically signaled that it is preparing to start reducing their $80 billion a month Treasury purchase program. This would implicitly let interest rates rise, which, as we have covered here at length, is the first step in essentially, it would let rates rise for the far end of the curve, which is the first step in raising the whole curve and the benchmark rate, which is at the very start of the curve. So the Fed first wants to let the rest of the curve rise, and then it wants to adjust the overnight rate. Now, to get a sense as to why the Fed is getting ready to take action, consider the following. The Fed's long-term inflation target is 2%, okay? As per the US Bureau of National Statistics, July's consumer price index came in at a 0.5% month-over-month increase. If we annualize that number, we get that annual inflation is at around 6%. That is already 3 times what the Fed target is. Some market observants have pointed out that a large chunk of the CPI increase was due to the increase in used cars. And while used car sales did increase by 41% month over month in July, if you look at the other segments, we see that they are all above 2% annualized inflation. For July, for example, food prices rose by 0.7% month over month, or 8.4% annualized. Electricity and shelter both rose by 0.4% month over month, or 4.8% annualized inflation rate, which is again way above what the Fed is targeting. Now, given the astronomical rise in US property prices and the recent trend in the rental market, it's very likely that rent prices will continue to climb. Again, and we want to highlight this data that was shared from Bloomberg, which shows the cost of renewing leases, essentially, as leases are rolling over. The increase on relative to the prior lease are now upwards of, they're in the teens right now, which is quite interesting. Again, rent prices relative to the last tenant are rising very, very quickly, and this should be continue to put upward pressure on the shelter component of CPI, which again points to the fact that CPI could continue to stay sticky above 2%, which is what the Fed is already looking at and preparing to take action. Moving over to our gold analysis, despite a rising dollar, geopolitical tensions bid up gold for the week, helping it finish up 0.8 or 8 base points, really 0.08% higher at $1,780 per ounce. Now, as we highlighted last week, the flight to safety phenomenon tends to bid up the US dollar, US treasuries, and gold. And it also tends to be negative for equities. We essentially saw this all play out last week with the US dollar up 1.01%, gold up 8 basis points, and the yields on the 10-year and the 30-year notes down quite significantly. So as we can see here, the yield on the 10-year note was down 3% last week. The yield on the 30-year note was down 3.8% last week. So as we said, all of this is essentially very typical price action when geopolitical tensions tend to flare up, and this trend could continue until such tensions cool down. Moving over to our DeFi analysis, we see that the DeFi index finished last week up 8%. So pretty positive week, highest close in a very long time. And if we look at Ethereum, as we mentioned, Ethereum finished the week down 2.11% at $3,241 per ETH. Now, a couple of interesting headlines came out throughout the week around Ethereum, and one of them was this article now that's behind your screen from the block that stated that two Ethereum ETF applications with the SEC were withdrawn last week at the same time. The withdrawals came from VanEck and ProShares. Both of these are fund providers that had applications for an Ethereum ETF. Now, the block piece suggests that the reason for the simultaneous withdrawals could have been that the SEC had a conference call to essentially tell applicants, or all applicants under that format, that they were out. And so it's very interesting that both of these applications were withdrawn at the same time. However, if you dig deeper, it may not be so scary as it may look at first glance, because the article also mentions that ProShares, who was one of the applicants, also has a Bitcoin ETF application. And then based on the comments that have been made by Gary Gensler, he essentially is stating that the SEC is looking more favorably at ETF applications that are based on futures contracts rather than physical assets being held. Now, this makes sense, as a contracts or a future contracts based ETF would be much simpler than a physically settled ETF. Given that, for one, when you're a contract based, you don't really have to worry about custody or physical delivery on redemptions. Now, for context and to kind of compare the two structures, GBTC, which is the Grayscale Bitcoin Trust, is not a futures-based fund. And therefore, the chances for it becoming an ETF based on Gensler's comments did not get any better. We can take a look quickly here at the GBTC premium or discount to net asset value. And as we see last week, the discount reached its lowest point ever at down 16.52%. However, as we mentioned, not all hope is lost, as there are now Ethereum contracts, futures contracts, trading on the CME, same as with Bitcoin. So what this likely means is that the ETF applications are going to be withdrawn and basically these service providers are going to reapply under a futures contract-based model. So we may see those applications for an Ethereum ETF on a futures model come through the SEC rather soon. Moving over to our Bitcoin mining difficulty commentary, we see that hash rate continues to pour into the network, with the next difficulty adjustment projecting an increase in difficulty of 8.8% to tentatively 16.93 terahashes, and that adjustment should be in at some point this coming Wednesday. Now, as you can see from your screen, the mempool has remained in really good shape. Transaction costs have been within 10 to 50 sats per VByte for next block confirmation. That's been the case throughout the rally. So a pretty good behavior we're seeing in the mempool. And we also, since we're in the topic of mining, we wanted to give a shout out to our friends at Compass Mining for getting Jack Dorsey, the Twitter CEO, to start mining Bitcoin with Compass. This is great to see Jack getting more involved in mining, and favorable economics and a welcoming environment have really all boosted all US-based mining efforts. Public perception of Bitcoin mining as an activity should improve over time as mining companies continue to set good examples for responsible operations and environmental awareness. So that's a great thing to see going into this week. And as always, we leave you with what's ahead for the week. It is important to mention, as we highlighted at the beginning, that we're heading into options expiration week for August. The max pain point, or the point at which most contracts will expire worthless, is sitting at around $40,000. Now, the expiration ticket is a relatively large one at 40,500 Bitcoins worth of contracts. So that 40,000 level may have some gravity to it as we head into Friday. Now, looking at Bitcoin's perpetual futures funding rates across major exchanges, we see that at the time of writing, Deribit and Kraken are both showing negative funding rates. Most recently, we saw Bitfinex turn negative. This means that there are more leveraged investors positioned short than long in these particular contracts. And it tends to be a sign of how leveraged traders are getting positioned in the current market. So interesting to note that those funding rates are starting to turn negative. And as always, we wrap up with a summary of the upcoming economic data points and earnings reports for the week. And this week is a big one. So on Monday at 10 a.m., we get existing home sales for July in the United States. There will be a few things to look at here, mainly the pace of property price appreciation. In June, property prices increased by 23% relative to June 2020. So important to keep our eyes here on this headline that's coming out this morning. Now, tomorrow, Tuesday, we get new home sales in the United States. Similar to existing home sales that are coming out today, the new home sales figures will focus both on price appreciation and volume of sales. This is important as it highlights that how many net new mortgages are being added to the economy every year. We have covered in the past that the Fed is purchasing $40 billion every month of mortgage-backed securities, which roughly equates to 160,000 mortgages. In June, the US economy added 676,000 new homes essentially that were sold. This means that the Fed is essentially purchasing about 23% of the equivalent of all net new home mortgages in the United States. This July sales number will put that percentage that the Fed is purchasing once again into perspective. So very interesting to see that dynamic. Now on Wednesday, another important day of data, at 11 a.m. Eastern, the Securities and Exchange Commission is holding a conference titled Emerging Trends, an in-depth discussion of consumer fraud, investment fraud, and the rise of digital and cryptocurrencies. This is going to be an interesting event as it could have a direct impact on crypto markets. Regulators will likely shed light on some of their concerns and plans around what they consider to be fraudulent activity in the space. It may also be positive in that they could highlight what parts of the industry they do not perceive as nefarious or negative. So very interesting event. Most likely everyone in the industry will be tuning in to get, to see what the latest regulator takes are. Now, Thursday, we get a U.S. gross domestic product revision, and we also get jobless claims at the state level. And on Friday, we get the Fed's very dear core personal expenditures index, which is another way of looking at inflation without food or energy prices. This number is very closely monitored by the Fed, and so it will be very interesting to see how the number continues to evolve. At 10 a.m. on Friday, Fed Chair Jerome Powell is giving a speech on the economic outlook at Jackson Hole. So this will, again, be very interesting as people will be looking into some of that tapering timeline. And then at 4 p.m., we get assets and liabilities for U.S. commercial banks. This week, as we said, Friday is a big day, so it closes with a bang, and markets could be volatile as they digest all of that data. For one, just talking briefly on the PCE, a number above 3.5% on the PCE could cause markets to sell off as the Fed continues to get pushed into a corner by inflationary pressures. So again, it's a big week coming up, and as always, we'll keep you posted on any relevant information right here on the economic calendar and through our social media account at Hodl with Ledn. If you learned something today, if you enjoyed this show, we welcome you to like it, subscribe to our channel, share it with your friends. If you don't yet have a Ledn account, I welcome you to check us out and learn how you can start earning up to 6.1% on your Bitcoin, up to 8.5% APY on your USDC. And we also have the best rates for Bitcoin-backed loans if you need cash and you don't want to sell your Bitcoin. Thanks, everybody. Have a wonderful week, and see you next time.